Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 BMO Global Metals, Mining and Critical Minerals Conference in Hollywood, in Florida. M&A is on everyone's lip this morning with a major transaction announced last night, a 7.7 billion Canadian combination of Equinox Gold with Calibre Mining. Joining me this morning to tell me all is Ross Beaty, Chair of Equinox Gold. Ross, welcome back to Kitco.
Thank you. I'm not going to tell you all, though. There's some gory details here we can't make public.
Well, okay. Let's start with some of the sort of headline aspects of the deal. This deal would make Equinox the second largest gold producer in Canada. It brings together two large Canadian development projects, one in production already, is Greenstone, and one coming in production in the coming months, which is Valentine. 7.7 billion at market transaction. It will create one of the largest gold producers in the Americas. What have I missed out?
Nothing. That's the result of combining these two companies. I mean, there's a lot more than just that, but it's a smart deal, I think, for shareholders of both companies, and it's going to be a very value-enhancing transaction that I think over the next, say, 6 months, 12 months, we're going to see a re-rate. We're going to see a whole pile of new money coming in as buy-side money, and I think the stock price is going to go up for both companies, of the combined company, and I think it's just going to be a great deal. We love the transaction.
Now, the resulting company will have 24 million ounces of reserves, 22 million ounces of measured and indicated resources, and forecast 2025 production of 950,000 ounces, and a line of sight to growing that to more than 1.2 million ounces per year. One of the key aspects, it's a zero premium deal, sort of you pitched it as a merger of equals. Why did you take that approach?
Because we saw a lot of synergy in the assets, of course, two big Canadian mines coming together, some international assets coming together, but more importantly, the management teams are very harmonious. We gain a lot of value from the operational excellence of the Calibre operating team, and they, I think, get some value add that we bring on the administrative and financial side. And so that's very complementary. We're going to bring the best people from both companies together. The board of directors will be a merged board. There'll be 4 from them, 6 from our side. We'll have, chair and CEO will be from the Equinox side. The COO and president will come from the Calibre side. So it's it's a really true merger of equals concept. And in terms of the, zero premium part of it on the Calibre side, if you look at most mergers that offer premiums, that premium vanishes in the first day of trading because the arbitrage guys get at it and it just evaporates. So, if there might be a 20% premium, the buying stock will be down 10% the first day, the selling stock will be up, and it just evaporates. So we thought, let's combine at market, let's not give the arbs any opportunity to game the transaction. And let's present this as what it is, which is the combination of two good companies to make one great one. And that's what we're going to do. We'll have the re-rate come in from being larger. We'll bring a whole pool of new investors into the company. The big generalist investors that don't go down market very far. The passive investors, the ETFs, there'll be more ETF buying because we'll be higher up on the ranking of some of these big ETFs like the GDXJ. So I think you're going to see quite a good positive re-rate from this transaction. And of course, all the financial strength and operational strength and diversity and just all that risk mitigation that comes from a bigger company with complementary assets. I think you're going to see that across the board here from investors once we complete the transaction. It's going to take 2 or 3 months to complete. But then the big reason for this is you bring together two preeminent cornerstone assets from each company together. Will be over 50% of our net assets will be in Canada with low cost, long life, brand new mines. It's a very compelling deal.
There's a lot to sort of dig into there, Ross. You've made a lot of deals throughout your career, and people say one of the more difficult things is the people aspect.
Sure.
At the board level and at management level, everybody wants to keep their seat, and how have you managed that here?
Well, the roots of this transaction have been a long time coming because I've been a very good friend of both Doug Forster and Blaine Johnson, who are the two sort of key players in Calibre. And we've talked for years about what we're doing. I was a shareholder of Newmarket, and that was a home run for Blaine and Doug. Absolute home run transaction where they sold that company to Kirkland Lake. Kirkland Lake was bought by Agnico Eagle. Shareholders did really well. And Blaine, more than anyone, I think, sees all of that opportunity here. So we've been talking about this deal now for 7 months or 8 months. And it just kind of wound its way through to completion, an announcement yesterday. But these deals do take a long time. And fundamentally, we like each other, we trust each other, we're going to work together in this new company. We have exactly the same ideas about value creation. I just really think it's going to be a very exciting company with like-minded people who have one singular goal of creating value. And I think the track records of both of us are pretty good in that respect. Together, I think we're going to do it again.
Excellent. Well, the timing couldn't be better with the gold at $2,950 per ounce, and also because Kitco Mining next week at the PDAC, we are going to do a panel on M&A consolidation of the mid-cap gold space, companies with capitalizations between 1 and 4 billion, because we do recognize that there is an opportunity for companies that can get into that 5 to 10 billion cap rate. We've called it a gold company Tinder, and Equinox Gold and Calibre Mining were companies that we were going to talk about, but we've been preempted by a preeminent deal maker, Ross Beaty. Why is growing to that size important in terms of differentiating yourselves?
It's a very weird gold market right now, Paul, as we talked about last time we were together. You have this absolutely, bizarre disconnect between the gold price, which is at record high, 2,900 an ounce, and has just been on wheels for the last year, and the gold equities, which are still trading as if gold was $1,800 an ounce. And there just has not been money pouring into that equity space because the buyers of gold are a different pot of entities than buyers of equities. This disconnect is unusual. It's really rare in the last 70 years when gold and equities have tended to trade in tandem. And I doubt that it will last. I mean, markets usually revert to means, and so this disconnect will close, and I doubt it'll close because the gold price will go down. So I believe that there will be a pool of new equity investors coming into the market. I thought it would happen last year, to be honest. It didn't. There's still this crazy low valuation on the gold stocks. But when it comes in, what happens is it usually goes to the quality names, the big names, the liquid names, the names that have some momentum. We've seen that last year in some names, Agnico Eagle, Alamos. They did wonderfully well in a market where most other companies, Barrick, Newmont, they traded flat. So there's going to be some kind of catalyst that causes new money to come into the space. And when that happens, I think it's the larger companies that will be the first to react positively. And I think that's why the market really will favor these larger liquid names like the new Equinox. And the mid-tiers will do okay. The juniors will still struggle. Some of them will do okay, but that's where the most, you could say, pain is happening right now, where there's just no buying in that sector. And there's tremendous opportunity, wonderful values, but a lot more risk. The big money just won't go down there. So it'll go into the spaces like what we're trying to create. And at the end of the day, if you look at the asset base we have, it's bigger, it's stronger, longer lasting, lower cost, incredible cash generation. So it may even have to wait until we start kicking out $100 billion a month in free cash flow, which is going to come to us in a very short while when these two assets are fully operating. We're going to have staggering cash generation, late 2025, 2026, 2027. Our debt's going to be repaid very quickly, and you're going to see a re-rate, I think, when that, if not sooner, but as that's happening. So that's really what I see in the next year or two, and that's why 1 and 1 is 3 is almost guaranteed as you go up that scale. It's getting bigger is value creating by itself. I've never been a big fan of just getting bigger for the sake of getting bigger. That makes no sense at all. There's no value add in that. But if you can get bigger and actually truly get a re-rate, then it's good to do per se, ignoring the synergies that come from assets, ignoring the overhead you're saving, the better management you're able to have, and so on. So I see a whole pile of reasons this sort of thing should be very positive in this particular situation with New Equinox.
Excellent. Now, with the low valuations of gold companies related to the gold price, that being the case, gold companies are producing gold at, let's say, an average all-in sustaining cost of $1,500 per ounce. Why don't gold companies hold some gold on their balance sheets rather than just cash?
Oh God, I've had to deal with that question for 30 years because a lot of people, when I was building Pan American Silver, they always said, all the silver bugs said, well, you should put silver on your balance sheet instead of cash. Mining companies, are in the business of producing gold or producing silver, selling it, using the cash flow to pay dividends, repurchase the stock, do all the normal things that any company does. They're not holders of bullion because they want to make a statement on a reserve allocation. Banks do that, and individuals do that. And if individual investors want to do that, let them do that. But mining companies need that cash for all kinds of capital allocation reasons, and it's just simply not. And by the way, mining companies don't hold cash to hold cash; they hold cash to use it. And if they have too much cash, a couple of things happen: either they get taken out by somebody who needs that cash and is willing to pay a premium, or they have a market reduction in value because cash doesn't actually add any real value per se. It adds 5% a year. Big deal. You want to deploy that cash into building assets or giving it back to your shareholders. That's what it's for. It's not to buy metal.
Okay. Now, following the completion of this merger, this acquisition, Equinox will have 9 producing mines and 5 expansion development projects. We recently saw Newmont Mining, the sector leader, complete a divestiture program to get leaner and meaner. Will Equinox Gold do something similar to offload perhaps smaller and/or higher cost?
Oh, for sure. For sure. We actually have 11 mines, not 9, but we're going, because there's a couple of small ones. But we will definitely, once the acquisition completes, once the merger completes, I should say, we will look at rationalizing the portfolio and trying to just simply enhance the quality of the overall portfolio. But I have to say, all of our assets are making pretty good money right now at $2,900 gold. So and some of them that were sort of on the chopping block a couple of years ago, like the RDM mine in Brazil, has actually spitting out cash right now. So it's kind of a hard thing to do when that's happening. On the other hand, it's a good thing for somebody to look at and acquire. But one of the problems in that strategy for us, because we're not a Newmont. We don't have like billion-dollar divestments.
Not yet.
Not yet, but today we don't have that. There is so little money in the junior sector that there's just not a big market for things that we might find too small for us right now. So these are all factors behind these things. It's very easy to say, sell some of those assets. It's a rather more difficult thing to do and get value commensurate with the cash generation that they would otherwise make for us.
Okay, well, fair enough. Now, Equinox has been paying down big chunks of debt, and I think it ended last year with about 1.2 billion in debt. What's the plan to continue to deleverage, obviously taking into account this transaction?
When we talked in January, I said we're going to deleverage as quickly as we can, and that is absolutely intact, except we have enhanced capacity to do that now. Calibri is generating really good cash flow from its Nicaraguan assets. That'll help us. And of course, as soon as Valentine gets built, it's going to spit out the same kind of cash as Greenstone is doing right now. So it'll enhance our capacity to do that. And our strategy is still 100% to delever as quickly as we can.
Okay. Now, when will the transaction close? And once it's closed, what will be the main milestones for the company this year?
We're guessing it'll close around May sometime, plus or minus. There's a couple of approvals we need, like in Mexico, for example. They take a while. But, it'll take 2 or 3 months in normal course.
And key milestones this year?
Obviously, completion of Valentine, that's the big one. After that, reducing our debt as significantly as we can. And nothing else particularly dramatic. We have growth all over the map. We're going to continue our growth. We've got permitting work at Castle Mountain. We have a big question mark at Los Filos in Mexico. What's going to happen there? We're very close to a kind of a come to Jesus on that deal. We've got an underground project to start up at the Aurizona mine In Brazil, I mean, we're just so stuffed with opportunity right now. It's just a delight. It's a delight to be with Equinox right now, and with adding the Calibri assets, it's a double delight.
Well, it's good to see lots of smiles.
Yeah, it's a nice time to be in the business. You know, with 2,900 Gold is just making it so much fun. And when you can bring these sort of value-adding companies, or when you can bring these type of companies together to really be convinced it's a value add for both sets of shareholders, it's just great. And these are very easy things to say. Oh, just combine those two companies. To actually make it happen is rather more difficult. You need the social side to work. You need the asset synergies to work. You need to get due diligence completed. And almost always, when a group of engineers look at an asset, they find problems with it. They just destroy it by 1,000 cuts until you never ask an engineer to make an acquisition, because they're trained to be worrying about all the things that could go wrong. But from today, say to the end of this year, we're going to put the deal to bed, get Valentine up and running, complete the ramp up of Greenstone, get rid of some of our debt. Get going on some of the other growth stuff, resolve those fields. We got a ton of stuff to do. It's all kind of happy stuff.
Well, congratulations on a great transaction. Ross Beaty, thank you very much for joining us today.
My pleasure.
And we have a lot more to come from the 2025 BMO Global Metals, Mining and Critical Minerals Conference here in Hollywood in Florida. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.